Today I'm going to be placing a trade on PHM, which is a home building company that I found on my distressed volatility scan this morning. I'm expecting to make about $1 per straddle or $100 per straddle that I put on over the next 10 days. You can see the calculation here. I'll quickly take you through it. I plugged in the at the money straddle that we're trading. It's this one right here. Come over the risk profile. This straddle, I plugged it in and I substituted in my forecast of volatility. And what you can see is we go from a straddle of $3.75 down to $2.92. So a little over 80 cents that we're expecting to make per straddle that we place. It's about $80 per straddle. Now, quickly looking at this, the reason why I'm placing this trade is the implied volatility versus the realized volatility over the last 10 days has been 1.36 times higher. So the implied volatility is outpacing what the stock is actually moving by about 36%. And as we know, if you've been going through the education, is that that represents the risk premium that we as option sellers would have been able to collect over the last 10 days, placing this trade on average. Now, looking at it relative to where that ratio trades historically, we can see that we are about 30 points higher than usual. That pretty much indicates to me that there's something that's maybe happened around this ticker recently, causing it to increase. And if we can come to understand what that is, there may be a really good trading opportunity. So that's, of course, the next thing that I went out and tried to find. I came over here to our good old-fashioned Yahoo Finance, and I basically found a few reports showing us that home builders recently have started to take a hit because of increasing interest rates. Home builders operate on a lot of debt, and they have a business model that definitely has implications with interest rate changes. And over the last few quarters, when we've seen interest rates change, we have not seen them take the hit that other sectors with a similar exposure take. And so what the market and what people are basically saying now is we're finally seeing some of that come into play for home builders. If we go over to PHM in particular, and we take a look at how it's traded over the last month, we can see that it is down about 4.3%. But if we look at 6 months, we can see it's up huge. So really, it's just the last little while we've seen this thing taking a hit, right? Since about August, which is when we see these articles really start, that's when we see this starting to really take effect for the company. Now we're seeing it move about 14% over the course of a couple months. And the trade that we're looking to place is over the course of 10 days. And we have about 5% break-evens on this trade. Now, assuming that the effect we're observing is true and it's because of this change in rates and the market finally starting to expect an impact on these companies, we can assume a similar level of realized volatility between now and their earnings, which is the end of the month. So even if we see a similar level of earnings, we trend down to maybe 72 or up to 78, something like that. Meaning we're still in a pretty good spot with this straddle. There's a pretty clear risk premium, right? It's pretty much between here, this yellow line, and this red line is more or less the risk premium that we are seeing on this ticker. So what we can do in that case is we can actually just come in, sell this straddle, probably not even need to delta hedge it at all. And if we see a similar level of realized volatility, we should be able to make some pretty good money here. To give you an idea, this is pretty much the core of the analysis I'm doing when I'm placing these trades regularly. So if you have any questions about this analysis in general, feel free to reach out in the Discord. Now, I don't think we need to go ahead and do any sort of relative value analysis here because we're trading such a short-dated tenor, and it's a pretty obvious reason why the risk premium's here. We're likely to see it on all the different home builders. And the fact that this is the one that's showing up on my distressed vol scan just tells me that this is where the risk premium is pretty high. So let's go ahead and place a trade here. We're going to come over and go to order entry. Oh, sorry, no, we're going to go to option chain. My apologies. And what we'll do now is we'll come over to more. Oh, no, sorry. We go to PHM first. My apologies. I'm like, why is the expirations not what I thought they would be? All right, October 13th. Let's turn on our strategy builder here. And let's go to, should we do the 75 strike or the 74 strike? We're trading at $74 now, so we're going to move this down to here. Hit the bid here, hit the bid here. All right, we'll go for one lot here, and let's try to get a fill at around 390. I believe we can get there, between there and 385, hopefully. Let's go ahead and place this. Come over to orders. No. Let's go ahead and lower that down. 385. I think we'll get hit here. No such luck. We'll let it sit for a few seconds just in case. But most likely we'll be bringing it down to 380. And we should get hit. There we go. So a fill at 380. That's the trade that we have on now for PHM. So let's come over here. We can take a quick look. We lower this down to 74. We got a fill at 380. Put that there. And this is our trade. So our break evens, right? If we come here, we do plus minus 5%. That's more or less what our break evens are, right? On the downside, it's about 5.5%. On the upside, it's about 4.5%. And this is the trade that we're going to be placing. So if you have any questions about this, feel free to reach out in the Discord. And if not, happy trading and good luck, everyone.